Good morning, good afternoon, or good evening, depending on where in the world you're signing in from. Today, I'm very happy to introduce Giga Metals CEO Mark Jarvis and President Martin Vydra to discuss the nickel market, with a focus on BHP's decision to temporarily shutter their Australian nickel operations, as recently announced. Before I allow these two gentlemen to dive into the issue, just do a bit of quick housekeeping. Today's event is being recorded. The replay will be available later this afternoon. Also want to say this is an interactive event. There's a little chat button in the bottom right corner of the screen. That should be the bottom rightmost button. Please ask questions at any time during the event, and we'll try to tackle them once the primary conversation has concluded. Now, that being said, we'd ideally like to keep this event targeted to the nickel markets. There is an additional event on Thursday with Giga Metals' Lyle Tritton regarding the Turnagain project specifically, where we can tackle any project-specific questions. That is enough out of me. Mark and Martin, I'll leave it to you. The floor is yours.
Well, thank you very much, Romeo. And I also want to thank you, Martin, for taking the time for this. Nobody knows better than I am, better than I do, how busy you are. So I just want to, before we get into the market, I just want to get a little bit into your background because it's quite interesting. You come from an operating background. You've got a lot of, you're an engineer. You've got a lot of experience with various industry organizations and a deep, deep understanding both of how nickel is mined and processed into various things, but also the end uses of nickel. So if you could just get into a bit of your background.
Oh, thanks. Yeah, thanks, Mark. And yeah, it's good to be here. Yeah, as you say, I'm an engineer. I guess I'd say I'm a second generation nickel guy. My dad was a nickel guy for close to 30 years. And I kind of, stumbled into this industry. I had no desire ever to be a nickel cobalt person. I stumbled in. And just through that, learned everything about nickel that I could, partly by osmosis, partly by experience. I have to say, working at an organization at Sherritt, lots of advantages because you get exposed to a lot of the global industry. Sherritt was a pioneer when it came to nickel technology, and BHP, who we'll be talking about slightly today, their Kwinana refinery is an exact duplicate of the Sherritt refinery in Canada that was built in 1954. So, most people don't realize that a lot of the nickel that is refined in the world is based on Sherritt technology. Early on in my career, after working at most operational and technical aspects at Sherritt, I wanted to get involved in the marketing side. So I spent a few years in the marketing of nickel and cobalt for Sherritt, which made me realize that nickel was more than just making it. It's who uses it and how it's used and what's important to them. And then ultimately, I also spent a large part of my career marketing the technology to extract and recover nickel. And we also have technology for gold and copper. So you get to learn a lot about the mining industry. This led me to lots of great exposure worldwide. I was asked by the London Metals Exchange to be a founding member of their Cobalt Committee when that was formed in 2010, and I served on that committee for many years. And Sherritt was also a member of the Nickel Institute, I think a founding member of the Nickel Institute, which is an industry association of nickel producers that get together and look to advance the betterment of nickel, the use of nickel through science. And I was fortunate that when I retired from Sherritt, I retired as the chairman of the Nickel Institute. So that gave me some great opportunities to meet people in the nickel world around all over the world. So yeah, 35 years now and counting, and just enjoying it.
Well, that's why, frankly, Martin, not long after you retired from Sherritt, you could have gone to any nickel project in the world and they would have welcomed you. You came to our project, and when that happened, I really took that as a validation of what we were doing. So that was great. So talking about nickel itself and the end users, it's not a simple market like gold, say. It's got many different forms. It's got many different end uses. It's got many different properties. So I'm just wondering if you could just tell us a little bit about some of the end uses, and some of the ways that nickel is made to fit those end uses.
Okay, well, I think nickel always has been to this date, and probably for the foreseeable future, the biggest end use for nickel is stainless steel or steel alloys. it's an alloying element with steel that provides certain properties such as toughness and corrosion resistant. We all refer to stainless steel. You know, we have stainless steel on our fridges. Stainless steel is become quite ubiquitous in this world, and stainless steel has a big consumer of nickel. So most stainless steel is about 8% nickel. There's various grades, various forms, and there's high nickel, but nickel provides, you know, certain properties for steel that allow it to be used in lots of applications, power plants, corrosion resistant linings, chemical plants. It's just a wonderful material that way. It's also gained a lot of use now in batteries, rechargeable batteries, specifically lithium ion batteries that we're now finding basically penetrating the EV revolution. So nickel is a big component of the cathode portion of the battery, the cathode active material, CAM. And sometimes people talk about nickel cathode, which is different than the cathode active material for a battery, but that's one of the biggest uses, and it's growing. You know, and nickel comes in many forms. There's two major forms of ore that supply the nickel market. There's the sulfide deposits, which Turnagain is a sulfide deposit, which sulfide deposits have historically been the nickel that's been exploited, especially to make class 1 nickel or nickel metal as a finished product. And there's also the lateritic deposits, which are nickel oxides. Those were traditionally exploited to use ferronickel, to make ferronickel, pardon me. And ferronickel is a product that is ranging anywhere nowadays from 10% to 65% nickel content, with the balance being iron. And that's the primary feed source for stainless steel. It always has been. We've read about, you can take ferronickel and you can convert it to other forms, which can then be refined to nickel metal. And those are all well understood technologies. So, you know, I could get into that as much as you want, but I think that's the two big uses of nickel today are the EV batteries and alloys, stainless steel. And those continue to be the big uses on the horizon, or that's what we see.
You know, well, you know, another you know, big market is intermediates, which kind of trade separately from you know, metal or briquettes. They're sort of their own market. They go up and down in price kind of independently. They've got their own demand supply curves, don't they? I mean, you're familiar with that.
Yes and no. I think most of the pricing is somehow tied to the metal price. That's what happens. Now, an intermediate, I talked about a nickel matte. That's an intermediate. Concentrate, which will make it Turnagain, is an intermediate. MHP, which is a product being made by high-pressure acid leach or HPAL operations globally, is an intermediate. Intermediate is traditionally referred to a nickel material that was upgraded to a higher content nickel that could then be further refined, ultimately to metal. So nickel intermediates became a very good source of feedstock for the battery. It was easier to dissolve a product like an MHP than it is to dissolve a full nickel metal powder to make nickel sulfate, which is then used to make a cathode active material for your batteries. So nickel intermediates have traditionally traded on pricing to metal, but in the last 2 years, we have seen a decoupling of nickel intermediate pricing from the metal price, especially in China. And what we're seeing is that nickel intermediates now trade at prices that are closely related to nickel sulfate price, which is closely related to the cathode active material price, the CAM price that battery producers pay. So yes, you're seeing a decoupling of nickel intermediates in terms of pricing, especially in China. In the Western world, there's still nickel intermediate pricing that I would say is tied to a percentage of the LME, but that's highly volatile. 2 years ago, MHP pricing was over 90% of the LME price. And earlier this year, it was below 70%. So it goes up and down. But yes, you're going to see more of that as EV and batteries create a greater demand for nickel intermediates. And as there are more nickel intermediate producers, you will probably see a decoupling of the nickel intermediate price from metal more and more.
It's just, yeah, it's very complex, and you know, most people don't really have a deep understanding of the nickel market. So thank you for that. Now let's get into the elephant in the room here. which is, there was an announcement, I think it was Friday. BHP is planning to wind down and suspend all of their nickel operations in Australia. Now, you're very familiar with their operations in Australia. There have been other mine closures in Australia before this. So, I'm just wondering if you could comment on that and what it implies for the overall worldwide nickel market.
Yeah, that's a good elephant, as you say. Let's rewind that tape a little bit. BHP got into the nickel business with their acquisition of Western Mining Corporation out of Australia, WMC, which was the original owner of Kwinana and Mount Keith. And back in 2004, when there was a spike in nickel prices, most of the Western organizations invested heavily in nickel processing because they felt that was the future. You saw, the big investment BHP into Ravensthorpe. You saw some other big investments. So BHP used to be a very, very large global nickel player. And in 2010, I believe they made the decision to close Ravensthorpe, divest themselves of that. They also divested from Queensland nickel operation. And then I'm not sure of exactly the year, they also spun out what became South 32, which was also the Cerro Matoso nickel operation in Colombia and some of their other nickel assets. So BHP made a decision to exit nickel in about 2010 and couldn't really find a buyer for Nickel West, the asset that we're speaking about today. So they continued to operate it, and with fluctuations in nickel price, they could make a profit. And to put it into context, in 2012, the nickel price was around $9,000 a ton. The Australian dollar was about 60 cents to the US dollar, and BHP was making money on nickel. Today, the nickel price is between $17,000 and $20,000 a ton. The Australian dollar is pretty close to par, or 90 cents to the US dollar, and BHP can't make money on the same operation. So you have to ask yourself what changed, and what this points to me is something that we've been talking about the nickel industry a long time, is the depletion of legacy mines. And if you continue to mine in operation, and I think Mount Keith has been in operation, I'm going to say from the 60s or 70s, because I think Kwinana was built in the 70s. You've been mining that for 50 years. So the high grade is gone. The easy to get to ore is gone. So they're mining lower and lower grade. And I think some of the properties around there that have been feeding their smelter at Kalgoorlie, their grades have been going down because they've been mined. And some of those operators have also, I think, been taken opportunity to sell their product elsewhere, except to BHP. So what it tells me is that even though the price of nickel has improved, and even though your exchange rate has improved, their other costs have not improved. A smelter isn't an energy intensive operation because you're using the sulfur in your ore as your energy. So you get your free fuel. So it can't be the energy cost so much. But I suspect, with a lower grade, they're going deeper underground. They're moving more material to recover the same amount of nickel to put into the smelter. And my last numbers were that Kalgoorlie or Nickel West had produced 80,000 tons per year of contained nickel in concentrate, matte, and other forms. So, they're probably moving, maybe 2, 3, 4 times as much material as they did historically to recover that same amount of nickel. Well, your costs go up. Australian labor rates are also known to be notoriously some of the highest in the world.
Right.
So it tells me that, BHP has probably said, nickel prices are higher, our exchange rate is higher, but we're finding that we're unable to compete globally. Our costs are not higher. And I think that's the big one. So they're recognizing that I'm not going to say a money losing proposition. They said they lost 300 million, but especially in the West, Australia, North America, Europe, where you have very stringent requirements with government regulators, whether they be ESG or labor relations or other things, it's tough when your costs go up, and you need to make, shareholders demand a return. And I think nickel was just not a big part of BHP's strategy, and they finally decided that at the cost structure they were seeing, they had to make a decision, and that decision was to put it on care and maintenance, shutter it, call it what you will. And I think other legacy mines in North America are going to be facing that same decision within the next decade.
Yeah, my understanding is that their break even currently was about $20,000 a ton just to break even, which is, you know, remarkable. But also, I mean, they had a supply contract with Tesla for 18,000 tons a year of nickel. So that's now going to go away. You know, Tesla's got to do something. I understand they've got a memorandum of understanding with Ford to supply nickel for their battery supply chain. So, I mean, there's some. It's 80,000 tons a year, which by itself is significant, but it's also, you know, some of these contracts are going away.
Yeah. Well, it's not that the contracts are going away, because, you know, BHP prior to this, they were just moving a lot of their nickel to the London Metals Exchange, the terminal market. But if you're Tesla and Ford or another OEM, you've just lost the ability to secure nickel units from a bona fide Western world producer that's transparent in their sustainability reporting, that's transparent in all of their other reporting, whether it be financial disclosure, their labor relations. You know, when you're working with, say, a BHP or an Anglo American, a Rio Tinto, a Vale, a Glencore, there's reporting standards, there's disclosure standards that they have to meet. So if you're Ford, for just to take one, and a shareholder asks you, where are you sourcing your raw materials? You can say, well, we have this contract with BHP. You know, they're Australian and all this. What's happening is the choices for OEMs is shrinking. You know, Western nickel production from, let's call it certified transparent production is drying up. Eramet got out of the nickel business in Sandouville, France, and sold that operation to Stillwater Sibanye. Eramet and BASF made a decision not to invest in Indonesia recently to build a large nickel operation. You've got BHP shuttering. Glencore and Vale are now the big boys, and they've always have been the big boys on the block that are non-related to Chinese production, because that has a stigma, and not related to Russian production, which has a stigma. You've got Sumitomo Metal Mining in Japan, which is a big supplier to Tesla and all the other OEMs. But after that, there's not a lot of nickel production that OEMs can go to. So their choices are being limited, and they're going to be funneled into Indonesia and Asia. And unless things change in the nickel industry, unless projects like Turnagain get built and running, there's going to be less and less choice. And it's going to be hard for the OEMs to demonstrate that transparency. You eventually hit a wall.
Yeah, it's quite amazing the way it's shrinking, and with the Sudbury Basin, with Vale and Glencore, I mean, these are legacy mines as well, and it's you know, they're underground operations, they're higher grade but underground, higher cost, but it's ever deeper and ever more expensive. So, you know, it begs the question, what's going to happen to them? You know, the whole sulfide business seems to be shrinking, and you know, it's a, you know, I understand that there's a looming shortage of sulfide concentrate for smelters.
Oh, exactly. So, as you know, I have close contact with, you know, I call them independent nickel industry analysts, whether they be Wood Mackenzie, Macquarie, CRU, those people. They have been talking about a sulfide shortage occurring for the last decade or two, and it's actually now starting to come. So, you know, the Boliden, the people that have the nickel smelter in Finland, they're continuously buying third-party sulfide feed for themselves. The Chinese have always been a source of third-party sulfide feed from Australia to sell to, you know, going back companies like Western Areas or Panoramic Resources. That was their off-taker. Those sources are drying up, as you say. Sudbury Basin, if you do a deep dive into some of the disclosure of both Vale and Glencore, you can see that their costs are going up, and companies are very smart. They, I was on the other side of the fence. You get to know how to hide your costs. But these guys, and when I say these guys, large companies like Glencore and Vale, their costs are going up. As you say, you're going ever deeper. You're chasing grade, and you just have to look at, Thompson shut down over a decade ago. That was a smelter in Manitoba. That was one of the, main pillars of Inco, Vale's operations. Now, they did find more high-grade ore there, and they're mining it again. But, since Voisey's Bay, there's not been a large-scale high-grade deposit discovered. Like, there's other companies out there that are promoting their deposits. They have some great drill results and that. But yeah, if you look at what's available, what's being found, there's nothing new. There's nothing that the geologists of the world have not taken a look at already. I mean, Turnagain was first discovered in the 70s, I believe, by Falconbridge. So there's not that much.
It was first discovered in the late 50s. It was in the late 50s was the first hole. Yeah. So yeah.
Yeah. So
yeah, no, it's interesting because I mean,
yeah. Sorry, I was going to say I could count on one hand
shutting down a smelter
in the world.
Right, and every time the big company shuts one down, they've got a huge environmental liability to deal with and to clean up. They would much rather keep these things running, I believe. So let's just talk about smelters again, just specifically and briefly. They are currently the main market, obviously, for concentrate like we would produce. They're the existing market. So what are the characteristics of a concentrate that smelters find desirable, and what do they find undesirable? Just briefly.
So I will preface this with, smelting. Pyrometallurgy is not my most area of expertise, but smelting was developed as a way of taking concentrate and upgrading it to a material matte, which could be further refined into metal. And you have to understand, going back, as I said, nickel was first exploited and refined for use in alloy steels. So sulfur is for lack of a better word, a poison in stainless steel. Sulfur makes steel weaker. It's undesirable. So nickel sulfide deposits came with its own fuel, sulfur, and you actually wanted to get rid of that sulfur. So what companies developed, the companies like Inco and Norilsk and Falconbridge, is smelting. They would essentially light the sulfur on fire with the atmosphere, create a sulfur dioxide gas, which is now captured to make sulfuric acid. And when you burn off the sulfur, the remaining material after you remove impurities is basically iron and nickel. Now, what a smelter wants to see is your sulfur ratio to your iron ratio to nickel. Nickel and cobalt and copper and PGMs are recoverable to an extent. You want to limit some of the impurities, and some of the older smelters, the ones certainly in Canada, run at lower temperatures than some of the newer smelters that have been built. So something like MgO, which creates a problem for the flux, the material on the top of the furnace, which is removed with the impurities. So they like to see the MgO levels stable, but they also like to see the mineralogy of your concentrate stable. So, Sherritt, they designed their refinery in Fort Saskatchewan in 1950s, which operated in 54. They were treating mostly pendulantite. And pendulantite is also the mineral that most of the smelters were treating at the time at Sudbury, Timmins, and Thompson. And that is a stable nickel material. If you start introducing other nickel sulfide minerals, like awareolite, hazelwood, things like that, you're going to start messing with your furnace temperature. And one thing engineers and operators like is stable operations. You don't like your temperature going up and down. You don't like your impurities changing. So they want, what they look for is a stable chemistry. And, I think that's one of the beautiful things about turning it. It's one mineral. It's pentlandite. And our concentrate, as you well know, as we've told our investors, our partners, is we're going to make a stable mineral which will not affect the operational stability of your smelter. And that's quite desirable. And I think that's been a challenge with some of our peer group sulfide deposits because they have a whole suite of minerals in there. So it tells you, what are you recovering? What are you treating? But I think consistent chemistry, consistent mineralogy, and consistent impurity level is what smelters look for.
And, from talking to Lyle Tritton, I think the same considerations apply to if you're going to refine directly by pressure oxidation, as Sherritt does in Fort Saskatchewan. I think it's a lot of the same characteristics. A lot of people think that pressure oxidation is the future of processing concentrate, particularly for the battery supply chain. Do you agree with that?
Oh, absolutely. I mean, that's the drum I've been beating for the last 5 years. You can cut the middleman out. You can cut out the smelter. With the advent of materials of construction, primarily high alloy steels with nickel, which have high corrosion resistance, with the advent of technological advancements in pressure oxidation, a lot of them pioneered by Sherritt, you can now take a Turnagain type concentrate, and this is, you want a higher grade nickel concentrate because you want to reduce the amount of iron that you're feeding into your autoclave. But you can take a high grade nickel concentrate like we have at Turnagain, and you subject it to introduction of oxygen and water. And what happens is the sulfur ignites. You're essentially burning the sulfur with the oxygen in a solution. It's the same chemical reaction you would have in a smelter where you're oxidizing the sulfur, but instead of sulfur dioxide as your sulfur byproduct, you're making sulfuric acid. So you create a solution of sulfuric acid, and oddly enough, you make a solution that has nickel sulfate and cobalt sulfate in it, and zinc sulfate and iron sulfate and things like that. So then through selective chemical separation, typically solvent extraction, you can then remove the nickel sulfate and cobalt sulfate. Now you have a pure nickel and cobalt sulfate form in solution, and you can recover that numerous ways. You can if you had a lot of cheap energy, you could crystallize the sulfate and just have pure nickel sulfate and cobalt sulfate. You can precipitate it into a mixed hydroxide precipitate, and the MHP made from pressure oxidation of sulfide concentrates is a much higher grade MHP than you're making from high pressure acid leach operations. Or you can recover it as a powder through hydrogen reduction, like Sherritt does, like Battery does, like Murrin does. Or you can make a pure metal cathode, like Vale and Glencore make in their operations. So you have a whole suite of options that you can pursue once you've dissolved that nickel into solution. And how you recover the nickel, because it is recovery, how you recover that nickel will depend on who your customer is, what your end game is. So, we've had discussions if a battery manufacturer, PCAM manufacturer, wanted Turnagain material and they wanted to turn that into PCAM in a jurisdiction like British Columbia, we would put a pressure oxidation plant in and just send them nickel sulfate solution over the fence, as we say in the industry. They would recover the nickel sulfate and send us the solution back. This is the concept that was floated with BASF and the Harjavalta in Finland, which couldn't get through certain hurdles, but that's the concept. If we were to feed the battery industry, but the PCAM plant was not adjacent to our operation, you would probably recover a mixed hydroxide precipitate, which is 40% nickel and 4 or 5% cobalt, and then ship that to whether it's be overseas to Asia or down to the United States to a PCAM manufacturer. If we were selling to the stainless steel industry, we could just recover a pure metal and we would make the nickel sulfate solution, and then we would recover the metal as electrowinning, electro 1 cathode, which is a metal plate cathode. And because of our ability to have proximity to low carbon hydroelectric power in BC, that'd be a fairly straightforward low carbon way of recovering nickel metal. And then you could store it indefinitely. You could send it to the LME, or you could send it to alloy producers. So there's just no limit. And I think smelters have outlived their usefulness. I think the technology is bypassing them now. And I don't believe you'll see any new major smelters constructed in the next 10 years, because it's a very expensive technology to create an upgraded intermediate. It's not a final product.
No, it's interesting. It's just that they do exist, and so they're going to continue to be a market until they're not a market anymore, I guess. But just following that chain of thought, and let's assume that you want the nickel for the battery supply chain. One thing I've noticed that's missing from the North American supply chain is the ability to produce PCAM and CAM. That's all done overseas, unless I'm missing something. But why is that? Why, what's the problem with taking, say, sulfate and produce nickel sulfate and cobalt sulfate and producing PCAM?
That is, as you say, the $64,000 question. And you are correct. I don't know the exact number, so I may be incorrect, but I would say 90% of the PCAM made in the world is probably produced in Asia right now. There might be some PCAM. There is some PCAM production in Europe. There is no PCAM production that I'm aware of in North America or South America or Australia. So to make PCAM, which is precursor cathode active material, what you're typically doing, and I'm going to simplify it because there's experts out there and it's gotten way more complicated than this, is you take your solution of cobalt sulfate, nickel sulfate, maybe manganese sulfate, and lithium hydroxide. And what you're making with CAM is cathode active material. You're actually making a metal alloy. So you take those solutions, because you can get them in a very pure form, and you can get them in a very strict dosage. And you introduce sodium hydroxide, NaOH, to that solution. And what happens is that sodium hydroxide reacts with the sulfate in the solution. And what you're left with is a nickel, cobalt, manganese, lithium hydroxide powder and sodium sulfate solution. And sodium sulfate is essentially Epsom salt. It's an inert salt, but it is a salt. And you make, for every 1 ton of cathode material, you make 1.5 tons of sodium sulfate solution, or somewhere in that neighborhood, and I may be off again. What do you do with this sodium sulfate solution? It's reams and reams of it. You can't discharge it into an aquatic waterway, a non-saline waterway. So you can't discharge it into freshwater lakes or streams. You'll destroy the species. You can discharge it into the ocean, because sodium sulfate exists in the ocean, but you have to discharge it in a controlled method so you don't overcome the area that you're discharging to. We don't have the mechanism in North America to discharge sodium sulfate. You have to be on the coast, in my opinion. You have to go through some rigorous environmental permitting and testing, but you've got to discharge this stuff in the ocean. There are other ways you can regenerate sodium hydroxide from sodium sulfate by electrolysis, and you regenerate the sodium hydroxide, but that's a very, very expensive way of regenerating it. Or you could evaporate the water and recover sodium sulfate crystals, but the energy required to evaporate that is also detrimental to the economics. So the reason PCAM production is focused in Asia right now is they have access to the waterways, and they have, environmental permitting that allows a fast track for some of these operations to control release their waste streams into the ocean.
Right.
And we have to get our head around that.
Yeah. No, it's if it's going to develop in North America, I agree with you. It's going to have to be on one coast or the other, and it's got to be in a place with good water flows. I mean, you're adding salt to the ocean. Big deal.
Yeah.
There's a ton of salt in an area that the water doesn't move much. So
Yeah.
let's just move on to the next. Just a second here. I seem to be having some technical issues. There we go. I'm back. Let's just go on to the next elephant in the room, which is Indonesia. They've come from nowhere to, they're currently more than 50% of world production of nickel, and it just seems to be going higher and higher. I'll go on and on about the negative environmental and social effects of what they're doing there. But that is a conversation for another day. I don't want to dive deeply into that right here, but just focusing on economics. How come they're able to build these projects? We seem to be having difficulty in the West of building new projects.
Yeah, that's very, very astute. So if we go back again, let's go back to the big nickel price run up of 2004 to 2007, where China was swallowing up as much refined nickel as it could from Western producers, because they were investing in infrastructure and manufacturing, and they needed nickel. And the price of nickel just continued to go up and up and up. And companies such as Vale and BHP and Sherritt and Norilsk were money hand over fist in those years. What happened is China realized, they didn't want to be beholden to Western pricing. China culture, China pricing, China economic models are completely different than we are in the West. And at that time, China was buying nickel ore from Indonesia. Indonesia was always known as a large nickel resource, and they were shipping ore directly to China to make into ferronickel. And when the price of nickel skyrocketed, the Chinese, everybody says, oh, they invented this new technology. Well, they didn't. They just restarted an old technology where they were taking lower grade laterite ores and firing them in furnaces that were old pig iron furnaces, and they created what they called nickel pig iron, which was, at the early days, it was 1-2% nickel, but that's all they needed. Then Indonesia realized, all of our resources being shipped offshore, and they introduced a law where, no, you can't ship nickel out of Indonesia, nickel ore, unless you're upgrading it here, or upgrading some of it, and you've got a window. So the Chinese said, okay. And then they realized, the same problem exists in Indonesia we have everywhere in the world, is if you want to develop a mine, you've got to go through a lot of steps, and you've got to appease, the indigenous people, the governments, the banks. And the Chinese were pretty smart. They said, you know what? I'm not going to own the mine. They do own some mines, but I'm not going to own the mine. I'm going to put up a facility to treat the ore. So what they did, and it started in Morowali as one of the places, they created these industrial parks, and they basically put up a sign that says, we're open for business. Bring us your ore and we'll turn it into a high-grade intermediate, and everybody wins. And that's what they did. And they got, the Chinese government and a lot of Asian governments, they have the long view. They said, we're going to invest in this, and we're going to back some of these mining companies that came out of nowhere with easy to access capital so they can build these facilities. And I'm not going to tell them that I need a 15% IRR or 5-year payback. So when the nickel price collapses, they're not going to go bankrupt. I'm going to tell them, you just need to deliver nickel to me, to my industry, to China Inc., to Korea Inc., to Japan Inc., because we're not going to worry about the profit on the nickel. What we're worried about is the profit on the battery or the radio or the car. So they invested heavily in these companies to the point where these companies have become the largest nickel and cobalt producers in the world. I saw this happen with Huayou and cobalt in the Congo. The big elephant in the room in Indonesia is Tsingshan, what they've done in Morowali, and a lot of other companies have followed them. And they've created a fast track. But, Indonesia's got access to a lot of low-grade nickel. It's got access to coal-fired power plants, because laterite nickel, for one of the biggest differences between sulfide and laterite nickel is to recover a ton of nickel from a sulfide deposit requires, let's just say, 1 gigawatt of energy. To recover a ton of nickel from a laterite deposit requires 3 gigawatt of energy. So 3 times the amount of energy. So you need lots of cheap available energy. And Indonesia, being a large supplier of coal, put up power plants. So for every power plant, coal-fired power plant that was being shuttered in the Western world, you had 3 going up in Asia to help feed this industry. So the global CO2 footprint didn't change. So they have access to cheap energy. Indonesia being on tidewater, you have access to all this ore coming in from various mines. Some of these operations get their ore supply from 50 different mines. They don't care. They can just barge it in, and then you can ship your product out on tidewater to China or wherever you need to go. And you have they have their own labor force. They bring their own labor from China. They build it with their own labor. They have cookie cutter fixed price bids. They don't have to hire Indonesian labor to build it. They don't have Indonesian specialists to run it. It's all like a small Chinese town within these villages. So they've got this formula where they said, okay, we'll build one. And a lot of people need to remember Ramu was the first one. And as everybody knows, I'm affiliated with Ramu too. And it's a great operation, but it didn't start like that. It had a 4-year build and it had a 4-year ramp up. It had its growing pains, just like all other, like Murrin or Mbatavi or Goro. But then the Chinese said, okay, we've got the winning formula here. We're not going to make it any more complicated. We're just going to build the same thing. So that saves your cost because you don't have to re-engineer it. Instead of ordering 3 autoclaves every 5 years, you order 20 1 year and you have them sitting there. So you get a discount for mass producing them. And that's what they've done. And they've got this design that works, and they'll just plop it in wherever. And they don't care about the mine. They don't have to worry about developing the mine. They don't have to worry about rehabilitating the mine. And they've got a plan, and it's working. In North America, we can't get our head around it.
Yeah. So who owns the mines? Who owns the mines in Indonesia then? Well,
I think according to Indonesian law, the mines have to be majority owned by Indonesians and Indonesian companies. So that's who owns it.
Yeah.
You'd have to go into their register, but they're Indonesian families, Indonesian companies.
Yeah. Okay. And could be other, like Indonesian politicians, perhaps. I'm speculating.
Yeah. So I spent a few years doing business in Indonesia for Sherritt. Sherritt had a joint venture with Rio Tinto on a property in Indonesia, actually on the island of Sulawesi. We called it the Sulawesi Nickel Project. It was a beautiful, beautiful deposit. We both decided to exit that project because of the complications of trying to do business in Indonesia. You had the federal government, you had the provincial government, and then you had the locals. So you had a minister, you had a governor, and then you had the bupati. So you had 3 different levels of politicians that had 3 different criteria to be satisfied. And then you had land ownership details. And those are so complicated, it just was not worth it. Now, I think that's where the Chinese said, we don't care who owns the mine and who runs it. We don't have transparency on sustainability reporting like you do. If a company like Rio Tinto put up a processing plant in Indonesia but didn't own the mine, I can sure as heck bet that their shareholders would want to know in their sustainability report, where are they getting their ore from? And is it being mined by children? Is it destroying the landscape? What's happening with the fauna? So Western companies are held to a different standard than Eastern companies, and it affects us.
Yeah, no kidding. But it's interesting because, everybody, all the consumers in the West feel like, oh, I'm buying a Tesla, so I'm saving the world, but it's actually, if you look at the way the raw materials are supplied, and you look at the species destruction and these strip mines just leveling mile after mile of rainforest and, dumping into the ocean and, mudslides on villages and all that sort of thing, but I'll start with species destruction and also extremely high, carbon emissions per ton of nickel produced. it just goes on and on. So let me ask you this. This whole electrification story and, how it's good for the environment and all that. If you were running a North American or European car company, how would you approach the raw material supply chain? And do you think reputational risk is a part of the calculation from the point of view of an OEM?
I think reputational risk is a massive part of the calculation for the OEM. I think OEMs are putting a lot of money and resources into managing reputational risk and being able to look to their investors and their customers and say, we are, and a great term is best in class. What does that mean? We're best in class. But I think the Western OEMs and Eastern OEMs, they want to have a great reputation. But in some cases, the electrification is delving into an industry that they have had no insight and no exposure into. So a lot of the people that are hired by some of these OEMs to manage their supply chain for the raw materials of the batteries, they don't have the experience or the knowledge of understanding where they're getting, where are you getting your nickel from? Some of the people that are running the OEM teams are ex-traders. Traders know the commodity. They know how to move it around and make money on it. Some of them have been to the mine site, but they're mostly financial engineers, for lack of a better term. And I have a lot of respect for traders. I know a lot of traders. But if you were let's say I'm a car company J, and you were the CEO and you said, Martin, I want to have 100% bulletproof surety that every product I buy comes from a certain standard. Well, then you have to hire the people who understand that to go all the way upstream to where you're sourcing it. Go to the mine and see how it's being sourced, see who's doing what, and know the industry. And there's not enough people in the world to do that. Now, with BHP closing, there'll be a few nickel people available, I'm sure.
Yeah.
Right? But you need business. And it's not an easy business to know. There's a lot more copper and gold people in the world than there are nickel people.
Yeah, it's a smaller market than copper, something like 1/9 of the volume, something like that.
Yeah. Yeah.
Well, that is pretty interesting. What about the point of view of having a long-term supply from a clean jurisdiction at a cost you can predict for decades in the future, rather than being a hostage to the short-term market in nickel, to the spot market? Do you think that comes into play? I know that we've had some conversations where that does seem to come to play, but even then, I'm not sure if the total understanding is there. What do you think?
I think well, let's face it. If you have a long-term, every OEM wants a long-term stable supplier. Whether it's buying tires from Goodyear or carburetors from X, they want to know what the price is, and if anything, they're going to push their supplier to reduce that cost over time, because their ultimate goal is to reduce the cost of their product so it's affordable to the general public. If you look at, say, our project, Turnagain, if we take aside the capital cost, which is with any new mining operation, that's always kind of the Achilles heel, is what does it cost to get into production? If you look at our forecast operating costs, under $4 a pound of nickel to make concentrate, that's going to be a stable cost for 20 years because, first of all, we're using hydroelectric power. So we're going to have a stable electricity supply. It's regulated from the BC government, and we're going to have a contracted price. It's not going to change like the cost of oil up and down 10 or 20% a year. It's going to be stable. We don't need to buy sulfur because sulfur comes with our ore. So if we make sulfate, we're not purchasing sulfur on the market, which also is now reducing in quantity and increasing in price, because the less oil and gas production you have globally, the less sulfur production you have. Our biggest fluctuation on cost might be our labor agreements with our workers. And we all know you can negotiate those in 3 to 5 year deals, and they're subject to inflation. So we tell OEMs, we're going to have a mine that's operating for 20 years. And if our cost of making that nickel is $4 a pound today, chances are in 10 years, it's going to be $4 a pound. Not a lot of laterite operations can say that because they're energy intensive and they're sulfur reliant. Both of those commodities fluctuate in price. And what does it cost to treat your tailings? A lot of people don't realize on an HPAL operation, tailings treatment can be between $1 and $1.50 a pound of nickel because you have to neutralize all that acid you created to liberate the nickel. And what do you neutralize it with? You neutralize it with a carbonate. When you react an acid with a carbonate, what happens? You evolve CO2. Half of the CO2 emissions from HPAL operations are probably from their neutralization step.
Yeah, wow. Martin, this is all extremely interesting. I think we've probably reached the part where we should open this to questions from the audience. So Romeo, if you've been collecting questions, how about it?
Yeah, absolutely. So I know we've only got 9 minutes left, so I'm going to prioritize the questions that I think are most on topic for today. For those in the chat, if I don't get to your question, it's very likely we can cover it on Thursday's event, which is really specific to the Turnagain project. So don't be dismayed. We'll get to it on Thursday. I'll go through a couple of questions that are here. So M. Babin asks, I'm paraphrasing a bit, but he says, with BHP shutting down production later this year, how's this going to impact M&A in the nickel space generally, with some, one of the bigger players shutting down some production?
I think what it does is it creates a greater fear of M&A. So people that are not in the nickel space are going to be more reluctant to get in because when the world's largest mining company is shuttering its nickel operations, it tells you that they don't believe in nickel. And I think BHP has said they don't believe in nickel for a decade now. They've just been trying to figure out how to get out of it. But then there's other players that are smaller, that want to increase their nickel exposure. Like, let's look at a company like Teck. They've just concluded the divestiture from their coal operations. They've said they're focusing on copper, so I don't have any insight and I don't know. But nickel now becomes something that they might become interested in. Lundin, very similar thing. Lundin was not traditionally a nickel company, but they have the Eagle mine in Michigan, which has been very profitable for them. So I think what it means is M&A of nickel operations is going to move down to smaller mining companies that understand mining. And the bigger players, such as BHP, they're going to be looking at copper, iron ore, coal still as their big generators of revenue. And copper is going to be the big winner from this. Nickel, it's going to be driven by demand, EV demand.
And I'd also like to point out, I read a recent study by Jim Lennon at Macquarie about EVs, and there's this whole narrative out there that EVs, the demand has fallen off a cliff. But what they showed is that the year-to-year demand, and this is in quite a recent year, is up 19% only. Now, this is from a long-term growth rate of over the last 8 years or so. It's been a compounded annual growth rate for EVs of 50%, which is astounding and obviously unsustainable. But 19% is within the sort of range for that. So this narrative that EVs have gone away now is simply false. So people are going to need to develop nickel, and in particular, the copper producers. A project like Turnagain looks very familiar to anybody that's operating, a copper porphyry style of mine.
Sure. Jay Halthani from the chat asks, how do you both see grade reductions impacting the cost of production of laterite in Indonesia?
So grade reduction refers to sulfide operations. Most laterite deposits globally are around 1% nickel. They range, right? New Caledonia is blessed with the highest grade laterites in the world. They're approaching 2% in some places. And Australia is blessed with the lowest grade laterite deposits in the world, where Ravensthorpe is mining nickel that's 0.6%. So there is really not that much of a problem of grade reduction in laterites, especially in operations like Indonesia, and that it's just a matter of, is the tonnage there, and what is the what are the impurities as you mine out a laterite deposit, you get closer to the bedrock or to the silicates, you're getting less iron. So I wouldn't say there's a grade reduction issue in laterites. Laterites are all surface mined and they can go on for large fields. It's grade reduction impacts sulfide deposits.
Although that said, I mean, in any mining area, you take the easy stuff first. So, you're going to tend to go for the best grades you can find, but also the easiest in terms of how it's situated. How close is it to the ocean? It's the cheapest to exploit. And that's not specifically grade, but definitely the best stuff goes first. That's always the way. And the harder stuff comes later. And that will happen in Indonesia as well.
Great. With 2 minutes left, I'm going to ask the biggest, broadest, hardest to answer question in the chat. So understood that we've only got a couple minutes. But Adrian asks, is the Canadian federal government doing enough to help the mining industry in Canada? And if not, what changes would you like to see?
So I would say absolutely not doing nearly enough. Sorry, Mark.
Yeah.
What changes I would like to see, and I'm a big proponent of this, is I believe the Canadian government should be giving low interest, long repayment loans to junior mining companies that are trying to develop their project so that we can build them. Our biggest hurdle is the capital to build this. If the Canadian government, along with provincial governments, said, okay, your capital cost is $2 billion. We're going to lend you $1 billion. We're going to give you a really cheap interest rate, 2, 3, whatever the Bank of Canada rate might be. We're going to give you that as an interest rate, but we're going to make that loan payable amortize it over 25 years, and we'll do a cash sweep that in years where the nickel price is so low and you're not making money, you're not going to be crippled by debt payments. Make it easy for Canadian mining companies to develop the mines. And I'll tell you what, 1 year, like if we were Turnigan, at some point in time in the 25-year lifespan of the initial mine, there's going to be 2 points in time where the nickel price is going to spike to, call it $12, $13, $14, $15 a pound. And not one of those times, you'll be able to pay off the government debt like that. That's all you need. So the Canadian government funds infrastructure problems. They've got to look at critical minerals mines, whether it's nickel, lithium, whatever. They're not doing enough in terms of providing funding to develop these mines. And that's what they should be doing. And that's what, I was in Japan with Natural Resources Minister Jonathan Wilkinson a year ago, 2 years ago, maybe now. And I told him, and I told his staff, the best thing you guys can do, when I say you guys as the government, is provide access to capital. That's what China did. Indonesia would not be Indonesia without Chinese capital. We need government capital.
Awesome. Well, we are at the end of the hour. Appreciate, Martin and Mark, both of your time very much. A lot of compliments in the chat. People seem happy with the conversation. I certainly learned a lot. Appreciate your time, and everybody who joined, thank you so much. Again, if we didn't get to your questions, it's very likely we'll be able to get to them on Thursday's event. But thanks for joining us. Everyone have a great afternoon.